Most people think Palantir is just another AI company, a data analytics platform, serving governments and large enterprises. But what if that's completely missing the point? What if Palantir is not just analyzing data, but actively shaping how decisions are made? And what if that makes it one of the most misunderstood companies in the entire AI ecosystem? To understand Palantir, you have to ignore the labels. It's not just a data company, a software vendor, or an AI platform. Palantir is building something closer to an operating system for decision-making. At its core, the company solves a very specific problem. Modern organizations generate enormous amounts of data, but they struggle to turn that data into actionable decisions. And this is where Palantir is fundamentally different. It doesn't just analyze data. It creates a closed-loop system where data is integrated, decisions are made, actions are executed, and outcomes feed back into the system. This is where things get interesting. Palantir's core advantage is something most investors overlook: the ontology framework. At a high level, ontology is a semantic layer that maps real-world objects, people, assets, processes, relationships, instead of raw data tables. Palantir models reality itself, and this changes everything, because once you understand relationships between data, you can simulate decisions, you can automate workflows, you can run operations in real time. And critically, this system doesn't just read data. It writes back into the real world, creating a continuous feedback loop. Most competitors focus on components: Snowflake to storage, Databricks to processing, cloud providers to infrastructure. But Palantir is building the full stack of decision-making, and that's much harder to replicate because it requires deep integration, domain-specific modeling, and continuous iteration. This is why there is no true direct competitor. Even internally, companies struggle to replicate this. Most internal systems become fragmented, slow, and expensive to scale. This leads to one of the most important points: switching costs. Palantir doesn't just install software. It embeds itself into workflows, operations, decision processes. Customers invest capital, train teams, restructure operations, and once the system is running, it generates real-world efficiency gains. Leaving Palantir doesn't just mean switching tools. It means losing operational capability. This is why net revenue retention is high. Customers expand usage over time. Another overlooked advantage: the go-to-market strategy. Palantir doesn't sell like traditional enterprise software. Instead, it runs AIP boot camps. These are intensive sessions where real data is used, real problems are solved, real results are delivered. And here's the key: time to value is compressed from years to days. This is a massive competitive advantage because most enterprise software takes months to deploy and requires heavy consulting. Palantir flips that model completely. This is not theoretical. We have real examples. In healthcare, Palantir helped automate denial management, increasing efficiency by around 50%. In manufacturing, efficiency gains translate into billions of dollars. In defense, mission-critical decision systems, and in some cases, planning processes reduced from hours to minutes. This is not analytics. This is operational transformation. Now let's look at the numbers. Palantir is not just growing, it's scaling aggressively. In Q4 2025, Palantir's revenue increased to $1.41 billion. This is a 70% year-over-year change, and company's highest ever growth rate since going public. This growth was boosted by strong momentum in the U.S. business, which accounted for 76% of the group's total revenue. It was 67% in Q4 2024. Adjusted income from operations more than doubled to $798 million, as the adjusted operating margin expanded to 57%. This is a 12 percentage points YoY increase in operating margin. Palantir continues to invest aggressively in its artificial intelligence platform and the U.S., while driving operating leverage at scale. Adjusted free cash flow increased to $791 million. This is a 53% year-over-year change and indicates a solid growth. To sum up, revenue is growing fast, operating margins are expanding, free cash flow is strong. At the same time, customer count is increasing, deal sizes are growing, retention remains strong. In Q4 2025, Palantir's total customer count increased to 954. This is a 34% YOY change. In the same period, Palantir's total contract value surged to $4.26 billion US. This is a 138% year-over-year increase and highest ever quarter. The remaining performance obligations surged to $4.21 billion US as Palantir signed a few significant long-term renewals with long-standing international customers. Finally, the dollar-based net retention rate improved to 139%, driven by expansions of existing customers and new customers acquired in Q4 2025. All these numbers prove that Palantir saw the effect of the AI revolution. While working in a revolutionary environment, interestingly, the company has zero debt. This is a very rare combination: high growth plus high profitability plus high retention plus zero debt. Now we get to the most controversial part. Total addressable market estimates range from $200 billion to over $1 trillion. Why such a wide range? Because Palantir's market is not clearly defined. If it's just analytics, limited. If it's operational AI, massive. And this uncertainty is exactly what drives volatility. This is not a perfect story. Now let's talk about real risks. 1. Competition. Large players like Microsoft and Google could enter. Competitors may intensify efforts in operational AI, potentially through pricing pressure, broader ecosystems, or accelerated innovation, challenging Palantir's differentiation if execution falters. 2. Economics. Platform model can be expensive, license, integration, operations. 3. Reputation. The handling of sensitive government and enterprise data subjects the company to stringent privacy, security, export control, and national security regulations. Evolving data sovereignty requirements, trade restrictions, or geopolitical developments could constrain operations or market access. 4. Execution. Scaling globally is not trivial. Once again, the same question: what is Palantir? An AI company, a data platform, or something else entirely? The answer may be simpler. It is building the infrastructure for decision-making. Turning to the big picture, Wall Street analysts expect Palantir's revenue to increase over six-fold until 2030. Normalized EPS is expected to grow over six-fold until 2030. Free cash flow is expected to grow almost seven-fold in this period, with the FCF margin ranging between 55% to 56%. We, as Capital Insight Lab, remain optimistic about Palantir's long-term prospects. Executing at an elite level, delivering record quarter results with industry-leading profitability. Palantir's exceptional Rule of 40 performance of 127% reflects a rare combination of hyper-growth for such a large company. Palantir has a differentiated position in enterprise AI. Its ontology, forward-deployed engineers, and AIP platform move customers from tentative AI trials to AI-native operations, while replacing legacy software and delivering exponential leverage.